The hype around the opportunities blockchain and cryptocurrencies present is a testament of how disruption in the current financial services system is inevitable. But what are the investment implications for frontier markets? Paul Domjan, the head of research, analytics and data at Exotix Capital, joined CNBC Africa for this discussion.
We're focusing on your latest report on the themes for the frontier markets, especially countries here in Africa, and especially how the implications, for instance, of blockchain technology and cryptocurrencies. But let's start with, to set the ball rolling, how technology has helped and is still helping these frontier economies leapfrog.
Excellent. Well, let's look at mobile phones as an example of how technology can help emerging economies to leapfrog. So we think about the introduction of mobile phones. When mobile phones were first introduced into developed markets, their impact was relatively modest because they were simply an alternative to making a landline call, whether finding a payphone and fumbling for change or going back to your office or hotel in order to use a telephone. By contrast, in developing economies, mobile phones gave a much larger impact because oftentimes the alternative was physically traveling to speak to someone or not exchanging information at all. So the classic example of this is a fisherman trying to decide where to land his catch. If that was a fisherman in the US Gulf Coast, he could get on his radio, speak to other fishermen, there's an established infrastructure, and easily find out where the best prices are for what he caught that day. On the other hand, if that was a fisherman in the Gulf of Guinea, before mobile phones, he had no way of understanding the best place to land his catch. With the mobile phone, as he came into shore, he could easily make a telephone call and maximize his earnings.
Quite an interesting example you've given, and I suppose, I mean, it's the examples are all over, especially in key economies like Nigeria, South Africa, and Kenya. But let's move forward now. In your report, you outlined 4 key functions blockchain technology and cryptocurrencies could provide, which you say are unique advantage to frontier economies. Share more insight on this, because you also say that out of the 4, only 2 could be of significant impact for frontier markets or emerging markets. Help us understand that.
Certainly. So if we think about, before we go into mobile money, before we go into blockchain technology and cryptocurrencies and electronic money, let's spend a moment on the existing technologies. Now, when we look at a new technology and its impact, the first question we need to ask is, when is that technology good enough to be better than what the existing option? So in the case of blockchain technology, the existing options are things like land registration systems, contract systems, existing means of enforcing and negotiating contracts, existing means of registering property. In the case of cryptocurrencies, the existing option is the existing national currency and the existing means of exchanging that and storing that national currency. So currency has 3 purposes. It's a store of value, a way of retaining wealth. It's a means of exchange, a way of trading currency for goods. And it's a means of accounting, a way of understanding the value of what you have. Now, cryptocurrencies are potentially quite volatile because they lack a central bank to maintain price stability. And there already is an effective means of accounting in national currencies in the US dollar. But cryptocurrencies offer significant advantages to frontier economies in the other 2 areas. In countries where there may be capital controls, exchange rate volatility, or expensive cost of accessing the banking system, cryptocurrencies provide an attractive means of exchange in certain circumstances. Similarly, in countries with exchange with capital controls, or volatility in the exchange rate, or potentially volatile interest rates, cryptocurrencies may offer a stronger store of value than national currencies, or at least a hedge on the existing system. And we see that today in the tremendous growth of cryptocurrencies in the frontier economies, whether that's stockbrokers in frontier Africa looking for a means of exchanging across borders, investors in Latin America looking at another way of expatriating profits, etc. Cryptocurrencies already are having an impact in the frontier. So those 2 areas, a means of exchange and a store of value, is how we see cryptocurrencies impacting frontier economies faster and disproportionately greater than in developed markets. If we look at blockchain technology, distributed ledger technology, this goes far beyond cryptocurrencies. And we see 2 particular areas where it will be a benefit to frontier economies. First of all, as a means of recording, a secure means of recording property or indeed any type of transaction. We already have blockchain-based notary services. There are experiments ongoing today with blockchain-based electoral systems that record votes securely in the blockchain. And indeed, if we look at, for example, World Bank doing business data, many frontier economies have weak and convoluted systems for registering property. And a blockchain-based property register is potentially an easy and attractive way to provide a stronger institution and an alternative to potentially cumbersome existing systems. So that brings us to our third mechanism as a way of registering property and indeed registering any type of transaction securely. Finally, blockchain technology provides an attractive alternative to existing systems for contractual mediation and establishing contracts. While it's not a feature of the most well-known blockchain, the Bitcoin blockchain, the Ethereum blockchain and some other blockchains enable what are called smart contracts. Now, this is a system where the terms of the contract are actually written as computer code in the blockchain. So, for example, imagine that I'm selling you a house. You put your deposit into the blockchain in cryptocurrency. We write a smart contract that says that when the deed of the house is recorded in the blockchain as having been transferred to you, the money is released to me. On the other hand, if the deed isn't recorded as being transferred within a certain period of time, the money would be refunded to you. There's no need to litigate the contract because the terms of the contract actually exist as computer code and execute as that transaction takes place. And this can be used for insurance contracts, for derivatives, as well as for real economy contracts like me selling you a house.
Now, Paul, on the face of it, it looks quite easy, and it almost sounds like a silver bullet, as it were. But I'm just thinking, how easy? Would you say that there's a broad, high level of understanding in terms of how the blockchain technology can be useful in these examples that you've given, and how easy it is? Would it be for firms, institutions, even governments to readily deploy it?
Yeah, I think we're in the very early days of this technology. When we think about any technology, it begins with early adopters. In the case of these technologies, the early adopter of blockchain technology were cryptocurrencies, and the early adopter of cryptocurrencies were enthusiasts and investors. As the technology matures, we begin to have a range of new actors start to look at it. So while technically what I'm talking about is all possible, the question is around who is able to seize that opportunity and innovate first. And I'd raise a couple of questions there. The first is, what companies are using this technology to deploy new services faster and more effectively? And I think that's a key question for investors. Secondly, which governments are using this technology to rapidly improve their institutions? Now, so far we've seen a lot of innovation in this space, particularly in Central and Eastern Europe. For example, blockchain-based notary services in Estonia, or blockchain-based electoral systems in Ukraine. But there's no reason why this technology shouldn't be rolled out across Africa. With pervasive mobile phone penetration, we have the basic underlying hardware to facilitate this. The key thing is around developing the software and the institutions. And the question that I would leave investors with is, will government seize this opportunity to improve their institutions? Many countries in Africa are seeking to do that, including Egypt, where I am today. Or will investors use this directly? Will citizens use this directly as a way of bypassing governments where institutions are weak? And I think the answer to both questions is yes, but in different places.
I'm just wondering, for the last part, where you say, will individuals use these technologies to bypass strict financial rules? I'm just thinking, with the issue of cryptocurrencies, there's still that ongoing conversation on whether or not we're still headed for, valuations are headed for a bubble. But on the other hand, there's also talk about regulation. Many governments, here in Nigeria, for example, the central bank has come out many times to say that, look, has given out a word of caution several times that, look, there's no regulation. We don't fully understand how this works or how it's going to evolve going forward. Nobody knows. We're just, like you said, it's still in early days. So I'm just thinking, could that be major roadblocks, challenges for those here in African frontier markets who want to go ahead and begin to deploy this technology?
Okay, so I certainly wouldn't want to suggest that anyone would use this to bypass regulations. I would suggest it's more a complement to existing regulations. But let me take those in turn. So I think the first issue is around that you mentioned is around the volatility of cryptocurrency prices and whether they're in a bubble. Almost by definition, prices will be volatile where there isn't a central bank able to add and remove liquidity. And indeed, that's an essential feature of cryptocurrencies. For me, though, the bigger question is, will this tremendous volatility in cryptocurrency prices lead people to become more cautious about the wider applicability of the underlying distributed ledger and blockchain technology? And I think it would be a tremendous shame if cryptocurrency volatility led potential innovators to step back from this technology. In terms of how governments adopt it, in every case where there's a new technology, the question is who is able to put in place a regulatory framework to facilitate that technology and enable growth. And we've seen that in a whole range of things, whether it's stem cell technology or indeed mobile telephony, that countries that are able to put in place a sensible regulatory regime quickly facilitate their companies adopting this new technology and developing new applications, new innovation, et cetera, more quickly. And I think we certainly have seen that in Africa with mobile money, where countries that enabled that to grow saw the benefits of mobile money much sooner.
So you think if a couple of companies could come out and they're innovative in the way they deploy this technology, you think that would inspire and encourage others to follow suit, like we saw the way the mobile telephony exploded on the continent? Do you think that is a pattern that would happen?
Absolutely. I think once one innovator solves a problem and demonstrates that, it's much easier to be a fast follower. It's much easier to see that innovation and adopt it in your own market. And indeed, that's what we see with technology distribution and diffusion in the frontiers, that a new innovation comes, it's developed in one or two markets, and then it very quickly is customized and adapted to a much wider range of markets. And as that happens, you get a lot of winners in those fast followers who bring it to new places. And indeed, the benefits for the African population and for African economic growth can be tremendous, because it means this technology is rolled out very, very quickly. This is already happening in the frontier with cryptocurrencies and blockchain. I mean, interestingly, if you look at the whole emerging market universe, the largest two investors in this space in terms of both the number of startups and the amount of money that they've raised are China and South Korea, but the third is Argentina. Not a frontier market particularly known for technology innovation, but one that has experienced problems in the past with currencies and therefore sees the application of this. The same thing can easily be true in Africa.
That was Domjan, the head of research, analytics and data at Exotix Capital.